Hello friends, welcome back for Rocky Outcrop's Bitcoin Technical Analysis. I'm Rocky Outcrop, we're all Rocky Outcropticians here together, and thank you so much for joining me. Long-time subscribers know that I've tried several times in the past to make short videos, and I've done it with limited success. Today's video is going to be different, I promise. Let's just see if I can get this all fitted into, less than 7 minutes. Let's go with that as a target for us today. And thank you so much to everybody who's a subscriber here, and I hope that I hope that this video here encourages some more of you to subscribe for this daily technical analysis that we're doing. So there's a lot to fit into this video as well. Obviously the price action has had a degree of volatility, and we'll be discussing that. And as you can see on the 24-hour Coinbase chart behind me currently, I've got some notes written out there to kind of make this process hopefully go a little bit quicker and smoother. But before we dive into the charts, I wanted to, if you can forgive the waffle, I swear the video will still end up being a short one, but if you can forgive this little bit of waffle, I wanted to dive over here to the comments and just say thank you so much to everybody who leaves comments down below the videos, who subscribes to the channel and is a part of this Rocky Outcrop community. I really massively appreciate it, and especially to people, that are saying things like, a special shout out to Nuno Teixeira here, who says, "Hi Rocky, I've learned more in 2 weeks with your TA than a year that I started trading. Continue the way you are." I mean, that's just absolutely fantastic. And I'm going to just say, thanks will do. That's an auto-generated comment that comes up at the start. I really appreciate it. And I wanted to do that on screen just so that you know that it's true, and I genuinely do appreciate it. And I'll get around to replying to the other comments that are on here, such as from Paul, thank you so much, from Chase, from again, I'm going to have to figure out how you actually pronounce that name, Spilux, I don't know, Spilus, Jason, Jay, Giorgio, everybody that takes part in comments down here, I really massively appreciate it. So just going back over to the chart, and then what are we going to talk about today? Well, we've broken that line there. We've broken through that serrated line that we had on the charts, and that's important still, and we'll look at that more in detail in a second. And also we're going to discuss the concepts of how there's been a bit of volatility after a golden cross. That's quite kind of standard, and it's something that you really ought to, put into your analysis toolkit. Is something that you can always remember, sure, if you're looking at these sorts of events happening on the charts. We'll discuss that ascending triangle, which I say is crap, but we could still get the measured move off the back of it, so we can look at that in a second. We'll take a look at where the moving averages are, how the price action's lining up against the fib levels. We'll see, does the monthly trend continue to go to the downside? We'll check on some gaps like the GBTC and the CME charts, and we'll check out where the previous daily low was. And I've got an "and" in here. I've obviously intended to put some more stuff on, but we'll actually and no doubt overshoots the time limit by a severe margin. There we go. That was well worth the time on that one as well. Right, anyway, so just stick that off to the side for now and go on into the price action and take a look at it. So this is this ascending triangle, and obviously it was a little bit crappy for us in terms of the statistical likelihood of these things breaking towards the upside. So often it actually goes against you, and we knew that could be the case. We discussed that there was a lot of bearish divergence down there on the 4-hour time frame as we're coming up towards these areas at the top, and we had a sort of overall feeling that this would kind of pan out to be lower highs as we have here, a high, a low, a lower high, and perhaps we're on the way down to make a lower low. So that's something that can be discussed during this. And if we were to make a lower low and have a breakout from this triangle, which is the way we had it drawn on previously actually, we could be looking down, as far as the 8,500 level, just as a sort of starting point there in terms of our analysis. Now, of course, we could obviously then rearrange this triangle, and I think that's maybe worth doing, just off the back of bearing in mind how these things are always subjective, and that if the prices were to continue from this point here here and go towards the upside, if they were to turn around here and go towards the upside, maybe we'd be looking at filling this thing out over a longer period of time. And indeed as well, maybe we're actually looking at having some sort of triangle on the go, which isn't actually even an ascending triangle. And there you can see it's starting to look more like a symmetrical one after all. So, you know, that's a bit interesting. And that's the first part just covered that we needed to cover. The important line for us in terms of the top side, though, of course, is going to be 9,500. I think that's where you can reasonably anticipate. Of course, I'm not a financial advisor, none of this is financial advice, but you could reasonably anticipate profit taking coming in there at that area. Is there somewhere that we can look towards the downside on this 24-hour time frame? Well, absolutely is. You know, just in here where the 21 EMA is, and I'm going to line this purple bar up with that at the minute, and just leave this on the chart for today and say, well, you know, this is around about this area where we could see prices turn around. You know, theoretically, from just in here at the 9,000 area. You know, it's a round number. The 21 EMA is here on the daily time frame, and certain things like that. Okay, but first off, as well, let's just discuss this notion. Like, after you get a golden cross, as we see here, this is the 50 simple and the 200 simple moving average. After you get one of those, you quite often get volatility coming in, and we saw that happen here, and that doesn't strike me as too much of a surprise. There's also the question of where would these line up if they were set to 70 and 280, and the quickest way to see that is over there on the CME charts, where they're actually lined up. This is 50, and this is the red one's 50 and 200. But of course, because there's weekends here, that's why they're so different, you know, and that's why you can see here that there's this upward slope on the 50 and this downward slope on the 200, and that they are coming together over time, but we're a ways away from a golden cross quite yet. As you can see here as well, in the past we did discuss this concept of a pipe top in around this area, and it looks to me to be the case that if we were to break below the around about this area here in that 8,900, that you could be looking towards the measured move off the back of something like this, which could in fact continue to carry the price on down further towards our other targets down below. Now, since we're on this chart, let's cover the CME gaps and look to what we could have in store for us still yet to come in the future. And down at this line here, not so much this one. I think this one was actually filled in the past. Sorry, so I'll just take this white line off for now, if it'll let me. God, come on! I'm trying to be quick here. Visibility, just to completely hide it. Oh God, just to get it right. God, it's gone. We've still got this gap down here at 7,500 area or so, and if we did see this work out in this sort of a formation, then of course we could expect that to be filled along the way. So going back over to the notes, just so I can see what we're supposed to be talking about next. Where am I heading it? So we've done that line, we've done the volatility of the golden cross. The ascending triangle's crap, you know, but where could that look like, and what does it look like on our chart with other patterns? Okay, so going back over here, and you can see on the noisy chart, well, maybe there's too much noise here. I'll just go a bit mixed where I've got this drawn in as well. You can see that perhaps we're in this descending broadening wedge, and if we were in the descending broadening wedge and you were wanting to remain bullish on this, despite the obvious bearish price action that there has been, as we've talked about over the last, you know, longest time really, you'd be looking down towards the lower end here where these moving averages actually are, and that could maybe where this gets caught up at. Of course, we only have one touch at the minute on this thing, so it's hard to say what the angle should be on the lower side of this, you know, could be in a variety of places, and just I suppose for convenience sake, pardon me, for convenience sake or so, I'll take it so that it's going, you know, from this where the market's turned around at here initially before that rise on down the way, and it cuts around here where we have these the golden cross occurring on the charts, and we could look towards that. But of course, there's a few levels on the way down there, 8,595 being one of them. But you know what we've got drawn on here on the charts, and why is that one of them? Well, that's because that's where the previous low was, you know. So we can, you know, that's the area to be aware of as we see the prices going down. Should they not be supported here by the 21 EMA and that 9,000 round number sort of price point, etc., etc., then we could be looking down towards that. How does the 9,000 price point line up in terms of our other chart over here? Well, we have this line drawn in from previously, which is this blue serrated line, and we can actually see that the prices came down. It's hard to see on this chart, maybe just there you can see that the red wick of that candle has actually come down just to here and then come back up again. That's kind of interesting. And how does that line up with this white line? So this white line, and what is this white line? Well, this white line is the monthly trend that's actually sort of suppressing the price overall, as you can see on the bigger time frame. So drawn in from here all the way down, going over the period of a couple of years here, and you can see that we've come back down and actually retested this almost as retested this white line actually more or less close to and so so far found it as support. Now, overall, on the 12-month time frame, that actually still leaves us with putting in a lower high, and we could again be looking towards lower lows. And should that actually happen and us go down here for lower lows on this downward, undeniable downward trend, which is a definitely, you know, in terms of the trend being your friend, that would take you all the way down to below that 6,500 level here. So that's something to be aware of on the grander scheme of things, and that would obviously become quite apparent to us if we broke down past the edge of our sort of bearish, our whatchamacallit thing, descending triangle, and past these areas here, the 8,000 levels. So we can see that the 8,000 level is fairly crucial for us in terms of price levels, and a target for us 7,500, where you have that CME gap, another one, and then thereafter you could be even looking down as far as that 6,500 should the prices continue to go on down. We can see the VPVR drops right off until you get down to the 7,000 areas as well. Now then, I suppose I can finish this off now because it's gone on long enough, and I have covered most of the things on that list, and I can do it by just wrapping up by drawing in a new Fibonacci retracement here. It's not, you know, it's nothing new. Go body to body from over here. In fact, that's so far off to the left. I'll just draw it in here on the right hand side so we can see the numbers easier. Obviously using these levels though to do it. So as you can see the serrated line of my crosshair, just for the sort of how you do this if you wanted to draw this on the charts but not have it over the price action. Just for the new traders out there, you can see that my line that's lining up there with the bottom part, and I'm taking it up here, and I'm going to make my crosshair line up with the top there where the bodies are, just so we can get the levels in, and we don't really need it to go across the price action to discuss them. Now we know then we're the first most important area for us in terms of Fibonacci, just in terms of making this thing a valid one, comes in at 8,600 and let's call it 8,700, as we've spoken about before, and going down past that area we'll see this previous low coming in, and if we actually break that, we'd be doing two things at once: creating a valid Fibonacci towards the downside, and of course going past here making lower lows as part of an overall quite clear at this point downward 24-hour trend. And you could easily then look towards the 382 coming in at 7,850 for the next area for us to try and hope for a turnaround at. Quite often things don't turn around until you get to the 50%, and like Dow Jones theory from, you know, more than 100 years old, and that's down there at 7,181. And should we see the prices go and do a golden pocket retrace, well, that lines up fair enough with that 6,500 area that we spoke about already. So I think that covers everything for us in terms of the broader picture, in terms of the price charts here and everything else. And I can finish again by saying, you know, it was no surprise to us that we saw this volatility coming in here. Now, maybe I didn't explain this enough, maybe I explained it too much, it's hard to know, but we have had these lines drawn on the chart with the 17th and the 21st indicating, you know, when the 50 simple moving average in terms of CME charts, or the 70 simple moving average in terms of the weekly time frame superimposed across 24/7 markets, would start to see this thing pick up rapidly towards the upside in the 17th and the 21st. So right, come tomorrow, we will see this continue to go towards the upside even sharper over here, and with this moving average, and that could be something to bear in mind as we're looking at this price action should it continue towards the downside. Final thing I suppose I can wrap up with by saying is that, of course, we're looking at the 9,000 area, asking will that operate as support for us. 9,500 up ahead of us in terms of our upper side area. Breaking above that, then we could look towards other factors such as the divergence and whatnot. I don't feel like I've really got time for that in today's episode, but overall, as you can see right now on the CME charts, with this being consolidation just as such at the minute, until the prices go below 8,700, I'll not look towards for bullish divergence quite yet, and until the prices then break back above the 9,000, well, actually let's call it 10,000 area, I'll not look towards any sort of bearish divergence overall in terms of the 24-hour time frame. Of course, I can look down again. Oh, there was one last thing. Oh fuck. Well, I'll get it less than 15 minutes. How about that? I'll do better next time. You know, the subscribers out there knew that this would happen. I'm going to try this again tomorrow though, or you know, and try and narrow down the time as much as possible. Okay, anyway, yeah, let's just have a quick look at the sort of, let's look over here at the Bitcoin, the BitMEX chart, and let me just stick back on all of the other moving averages that we tend to use on a regular basis here, and just kind of see where they're coming in at on the lower time frames. You can see we're being supported in a sense, if you want to call it that, by the 144 exponential moving average here in the 4-hour time frame. We're not massively blown away by that. While we're on it, let's just look at the divergence. Actually, fuck it. No, it's not bulishly divergent, so there we go. 12-hour time frame. 50 exponential here, of course the 50 simple right there on the price action itself at where it currently is. 50 exponential, this green line just coming in here at 8,900. But then if you go on down below there, the 144 and the 233 don't come in until we're down here at the lower 8,000s, and that's some ways away. And let's look towards the 24-hour time frame and see where we can see these other things happening at. Well, of course you had the exponential 50 crossing over the 200s a while back, and as a result of that happening, we've seen downward price actions, volatility. That's not a surprise at all. And actually that's going to have to do us. Let's just see if we've got divergence here just showing up. Oh no, of course we don't, because the 24-hour time frame. What about the 12-hour time frame? No, we won't have that quite yet. That's just consolidating phase. Of course, let's just then, I suppose I can finish up and tie a bow on this just by reminding everybody that we did redraw that triangle at the start, and we can look towards that in terms of the next potential sort of chat about measured moves. That would take us all the way down to that mid 7,000 area. Yet again, of course, should that be the case, the top side resistance coming in, of course, at that mid 9,000 level, 9,500. Thanks so much for tuning in. 17 minutes. Fail. Okay, right. Okay, thanks so much. I'll do better tomorrow.